Hi students, my name is Chris and I'm an accounting tutor with Chegg Tutors. In today's tutorial, we're going to discuss the statement of cash flows using the indirect method. In preparing a statement of cash flows, there are two methods that can be used, the indirect and the direct method. For today, we're only going to focus on the indirect method. So the purpose of the statement is to explain the changes in cash and cash equivalents for a given period, a month, a year. And what it does is provide information about a company's cash inflows and outflows from the following activities, which are three: operating activities, investing activities, and financing activities. Let's look at each one and see what makes them up. For operating activities, that relates to the selling and producing of goods or services that go into calculating net income or loss. For investing activities, that can include buying debt and equities, purchasing and selling fixed assets, or making and collecting loans. For financing activities, there's the issuance or redemption of long-term debt, the sale or purchase of stock, or dividends paid or received. What the indirect method does, it adjusts the net income or loss for a given period by certain items. Those items include depreciation, amortization, gain or loss on the sale of fixed assets, or changes in current assets and liabilities. And what we do with those adjustments are reconcile the net income or loss to the net cash flow from operating activities. The best way to see this is really look at how we prepare the statement of cash flows based on some information that we're given. So for ABC Company, we have select information for a month ended December 31st, 2015. We're told that net income is $34,000. Depreciation expense for the period was $16,000. ABC Company sold some equipment and had a gain on the sale of $3,000. The actual proceeds, the gross proceeds from the sale of equipment, were $8,000. The original cost of the equipment sold, $17,000. The accumulated depreciation on that equipment was $12,000. ABC Company in the month also paid dividends of $20,000 and issued common stock where they received proceeds of $12,000. We also have a comparative balance sheet for ABC Company for the month ended November 30th as well as December 31st. Taking this information, we're going to be able to prepare a statement of cash flows using the indirect method. So first we start with net income, which we were told was $34,000 for the month. Now to that, we're going to make certain adjustments to reconcile the cash flow from net income to the cash generated from operations. The first item is depreciation expense. That's a non-cash item, which was used to calculate net income, but for cash purposes, we're going to add it back to net income. So we have depreciation expense of $16,000 that we're adding back. The gain or loss on equipment sale, in this case it was a gain of $3,000, but for cash flow purposes, we're going to subtract that from net income. Then the following steps are going to be to reconcile current assets and current liabilities, the changes in those, to net income, where an increase in assets is a use of cash and a decrease would be a source of cash. So for accounts receivable, if we go to the balance sheet, we see that at the end of November, the balance was $30,000. At the end of December, it was $39,000. It increased by $9,000, which is a use of cash. The same analysis would be done for inventory. In this case, inventory for the month ended November was $18,000. And for the month of December, the ending balance was $33,000. A change of $15,000 increase, another use of cash. Now for liabilities, it's the opposite. If liabilities increase, that's a source of cash. If they decrease, it's a use of cash. So we look at accounts payable. The ending balance for November was $25,000, and the ending balance for December was $9,000. So we have a change of 15, and in this case, since accounts payable decreased, it's $19,000, it's a use of funds. Accrued expenses. We see that the ending balance for November was $11,000, the ending balance for December, $10,000. Again, a decrease of $1,000, which is a use of cash. So we add these adjustments to our net income, and we come up with a reconciled number of cash generated from operations of $3,000. That's 34 less the adjustments to come up with the $3,000 cash generated from our operations. The next section that we're going to look at is the cash flows from investing activities. So we're told again that equipment sale, the actual proceeds for the sale, the cash received was $8,000. We also see that the company repaid some long-term debt. And we can tell that by looking at the balance sheet, where at the end of November, their long-term debt was $25,000, and at the end of December, it was $11,000. So we can tell that they repaid long-term debt by $14,000. Obviously, that's a use of cash. They're the only two items that apply for investing activities. So we add those, and we see that we have a net cash used in investing activities of $6,000. The next section that we're going to analyze is cash flows from financing activities. In the information we were given, we were told that the company sold some common stock and received $12,000 in proceeds. Obviously, that's a source of cash. They also floated some short-term bonds payable. Going again to the balance sheet, we see that their ending balance for November was $10,000. They floated the bonds that brought the balance up to the end of December at $16,000. So again, a source of cash, $6,000. And then finally, we were told that the company paid dividends to their stockholders of $20,000, a use of cash. Adding those numbers up, we have net cash used in financing activities of $2,000. So when we take the net changes from operations, from investing activities, and from financing activities, we have a net change in cash of $5,000. And we go back to our balance sheet and see that the ending cash balance for November was $12,000. The ending cash balance for December was $7,000, which was a change of $5,000, a decline in cash. So we used $5,000 in the month of December. And that is our reconciliation on the statement of cash flows, where our net change in cash of a -5, our beginning cash of 12, gets us to our ending cash balance of $7,000. So that shows some of the uses and sources of cash and what would go into generating the statement of cash flows using the indirect method. The important thing to recognize in preparing the statement of cash flows using the indirect method is that this section here is the key part of it, where you're reconciling net income by adjustments that were uses or sources of cash to come up with your cash generated from operations. So if there are any questions or things that you would like to discuss about the statement of cash flows using the indirect method, please look me up on Chegg Tutors. Also, if you need assistance with any other accounting topics, I'd be happy to help you. Thanks very much for your time, and I look forward to speaking to you again in another tutorial.